Inflation has quickened. The annual rate rose to 3% in June. This marks the highest reading in 4 months. Now, the increase was driven by several factors, including higher food prices and health costs. And while transport costs continued to drop, the pace of the decline was softer during the month. Investec suggests this could be the start of higher inflation as it sees the rate rising towards 4% by the end of the year. Nevertheless, the bank believes the Reserve Bank will still cut interest rates. It expects at least one more 25 basis point reduction this year, which could be announced at the next MPC meeting, which takes place next week. Treasury says a major overhaul of the national budget process will be rolled out for 2026, and that aims to cut waste, improve spending efficiency, and align with decision-making under the new GNU. The new guidelines have come in a week when Finance Minister Enoch Godongwana's contested 2025 budget is going through its final stages in Parliament. Treasury says SA's current budget process had not kept pace with the country's evolving fiscal, institutional and political realities. It's added that a review of the process had shown critical limitations that the budget reforms would seek to address. The JSE has hit a historic milestone. The bourse's all-share index has breached the 100,000-point mark for the first time in its 137-year history. The rally has primarily been driven by mining companies as gold prices have hit record highs. Financials have also given impetus as banks have shown resilience to fears about trade wars and their implications on global growth. Meanwhile, the JSE is considering 24-hour trading. That's as the world's largest stock exchanges think on the same move. The Nasdaq has already announced that it's eyeing 24/7 trading from next year, while the New York and London stock exchanges have also indicated plans for round-the-clock operations. The JSE's Director of Capital Markets, Valdine Reddy, says with the JSE having over 25% of its counters as dual-listed and with a mix of both global and local issuers and investors, the bourse is watching the space closely. This will help it understand the timing and trajectory of global market shifts so that the exchange can respond appropriately. Vodacom has got its new financial year off to a strong start. The mobile operator has reported a 10.6% rise in first quarter group revenue, and that's thanks to good growth in the contract segment in South Africa and a strong contribution from Egypt. Service revenue in that territory jumped 43.8% in local currency terms. Commenting on the results, CEO Shamil Jusuf says the encouraging trends from this performance support the group's confidence in upgrading its financial targets, signaling that the organization is poised for stronger growth in the medium term. Karoo has recorded another quarter of double-digit growth. The car truck owner has posted a 19% rise in adjusted earnings per share in the 3 months to end May. This was supported by gains at the firm's South African unit and an aggressive expansion in Southeast Asia. CEO Zach Callisto has described the first quarter results as strong and added that it highlights accelerating car truck subscription revenue growth across all regions. The tills at Mr. Price were kept busy during the group's first quarter. The fashion retailer says sales rose just over 6% to 9 billion rands during the period. This was supported by strong trading in April and May thanks to early winter demand and the timing of Easter. Mr. Price has also noted that it continues to gain market share. The group has cited findings from the Retailers Liaison Committee, which shows that the company has secured more than 300 million rand in market share from competitors over the past year. And this highlights the effectiveness of the group's value offering. The Competition Tribunal has approved Canal Plus's takeover of MultiChoice subject to agreed conditions. This includes a package of guaranteed public interest commitments proposed by the parties. The total value of this amounts to around 26 billion rand over the next 3 years. The companies have stated that this will help fund South African general entertainment and sports content, which will provide local content creators with a strong foundation for future success. AECI has forecast an earnings jump. The Mining and Chemicals Group says interim headline earnings per share are expected to more than double. That's largely due to the positive impact of a reversal relating to impairments on the classification of the food and beverages business being held for sale. More detail will be available when the company opens its books on the 30th of July. Santam has been granted in principle approval by Lloyd's to launch a syndicate based in London. South Africa's largest short-term insurer says this will help it accelerate its international growth and diversification goals. Final approval is expected in the fourth quarter, with underwriting likely to take place later this year and business starting from next year. The syndicate will enable access through Lloyd's licenses to trade in roughly 77 insurance and 200 reinsurance territories across the globe. Adcock's shares have surged. The pharmaceutical company's counter has ended the day 18.1% higher. That's as the market shared an offer from India's Natco Pharma to buy a stake in the firm. Natco has agreed to pay 75 Rand per share for all the stock that is not held by Adcock's largest shareholder, Bidvest. This will make the firm a co-shareholder and will give it a 35.7% stake. It also means that Adcock will delist. And in international news, President Donald Trump says the US and Japan has struck a trade deal that includes a lower 15% tariff that will be levied on US imports from the country, including autos. Here's more detail in this package report.
Donald Trump says he's struck another trade deal.
But I just signed the largest trade deal in history. I think maybe the largest deal in history with Japan.
The deal sees a 15% tariff on the country's exports to the US, including cars. They had previously faced a 25% levy. In a post on Truth Social, Trump said the deal would also see Japan invest $550 billion in the US. And he said it would secure access to the Japanese market for US products, including rice. One analyst said it was a better outcome than expected for Japan and would allow the country to avoid recession. In Tokyo, Prime Minister Shigeru Ishiba welcomed the deal.
25% まで引き上げる.
He said it marked the lowest rate set for countries that have a trade surplus with the US, and added it would not sacrifice Japanese agriculture, even if it did allow more access for US produce. It all marks the biggest agreement yet struck by Washington since the tariff turmoil began. Japan is America's fifth largest trading partner in goods, with two-way trade between the pair worth almost $230 billion last year. The news sent stocks higher in Tokyo, with the Nikkei index up around 3% by lunchtime. Automakers were among the top gainers, with Mazda and Subaru both surging more than 15%. Trump also flagged the possibility of more deals to come.
And we have Europe coming in tomorrow and the next day. We have some other ones coming in.
Trump aides are now scrambling to do more deals before his August 1st deadline for agreements.